What is going on, everyone? Welcome back to another video, another day, another dollar, where we're going to be breaking down the futures contract. We're going to look at our 30-minute profile real briefly today, and then just look at the daily time frame, as those two are the only two that have really changed anything. We're still down on the weekly, having an inside week potential, and then we have our monthly that is still down, coming to the close of October. We officially start November tomorrow, so we'll see how we react to the Fed tomorrow, the Fed decision tomorrow, and then we'll have the start of November, right? This was the end of October. We're starting November, and if you guys will excuse me, I'm a little under the weather at the moment. My got a scratchy throat, so I'm trying to make it through this. Anyway, nonetheless, let's dive right into what happened today. So, looking at the 30-minute time frame, our majority of the day was pretty much rotational, choppy price action. You could have taken shorts early on in the day against both the overnight high and the this area that I was talking about in yesterday's video, the go no go zone for buying. Like, right, I didn't want to be a buyer in this range, right? So obviously I would have been shorting initially against that area, right? 97.50 to 205. And I said in yesterday's video, the only time I would be looking to buy is if we had something like a trend day up and showing acceptance above that price point, right? So that's what we had today. We had a set of single prints. We ended up going trend up with a double distribution day. Textbook afternoon pullback low. So we have a double distribution day with holding, very small set of single prints, 1 point worth of single prints, but it is there. We attempted to hold a second set that were actually rather large, but they got filled. And that's actually where I got long. I was a buyer around the 202 level and let this thing ride up, and I got out 05. I should have held on much longer because clearly that worked out. But I only took 2 trades today on the Apex account. 2 trades, $200. Cannot complain. I took the long there at 202, got out, and then I had another trade for very small on a long on a pullback near the high. Very small gain on that trade. But anyway, let's get back into it. So early on in the day, there was nothing for me. It was pure chop. It seemed like it was going to be a rotational day prior to the Fed. So I, opening up inside of the previous day's range, had value overlapping to higher. Really wasn't my forte. We actually were one time framing down early on in the morning, only to stop it, take out the initial balance high, and then attempt to, take out the overnight high. Right, so if I were to include the full session here, let's go to futures, show extended hours trading. Okay, so I'll show you guys real quick the overnight high. So the overnight high at the moment was right around 41.9975. Okay, so we had the previous day's high in the way at the moment. And then we had the overnight high at 99.75. So on pushes up early on, you could have been shorting 95 and then using 97.50 or 99 as your out, right? But once you got one of those overnight highs or low, that's when, you kind of give one side the benefit of the doubt, right? So in this case, today we took out the overnight high. We couldn't get the overnight low. We got kind of close, but not close enough to front run it. We kind of just chopped inside of that range for majority of the morning. And then finally, we started to get a squeeze up into the evening. And that's what, once we got above the previous day's high, that's when you were going to go attack our balance high at 42.05. And then once we got above that, your next destination on the upside is 42.3175, which was a bit of a stretch, especially since today's range was small and the volume was light. It was an unlikely chance that we would go and get that. Now, I wasn't going to put it past them. But another thing that I had in mind was, if on my 10-minute chart here, we were pushing into this high volume area where we did a lot of volume. And I wasn't expecting us to just kind of push through it on the type of volume that we were doing today. I was not expecting us to kind of just ride straight through it and then pop up to that afternoon rally high at 31.75, right? Was not expecting that to happen, was expecting a bit of a stall. So anytime we pulled back from that area, I was very cautious about buying, but I definitely was looking to long. And I actually missed the long in M period around the 205 level against the 144 simple moving average. And it got a pretty good bounce going into the close. And that would have been the only other trade that I'd take on the day. Other than that, it was just a rotational, choppy price action day. There are some stipulations, all right? Some things we need to review. Let me get rid of all this crap here. I'm going to say that the daily is stretched. You know, other people can say that the daily is one time framing up, and there's nothing wrong with that, but I need to see buyers really step into this market and show me that this was just more than short covering. So tomorrow, if we take out today's high of 42.15, if we take out today's high of 42.15, then I will say that the daily is one time framing up, and then we'll look to attack the previous week's high from that point, right? It all starts in baby steps, right? On our 30-minute, we start looking at attacking those previous day's highs, the afternoon rally high, things of that nature. In our bigger picture, we look to take out daily highs, and then we look to take out weekly highs on our daily. And then from the daily into the weekly, we look to take out on the weekly time frame previous week's highs, and then monthly highs, right? That's how it goes. Same thing on the downside. You look at if sellers want to say that we just stretch this and we hold this high volume area where we kind of just chopped around late in that move down on the 25th, right? If they want to hold this area, the 4,200, and sellers really want to step in, then they need to look at taking back the set of single prints, getting back into the lower distribution, taking back the afternoon pullback low, getting that daily low. I don't know why this one's red. Getting that daily low, and then attacking the rest of these daily lows, and then, you know, putting the daily from balance to one time framing down, and then attacking the previous weekly low, which would be at 41.2225, right? That's just how it works. You kind of reverse engineer it. So sellers want to defend up here at the 4,200 level. Buyers want to defend. Basically, buyers do not want to open up in the lower distribution tomorrow. What I'm about to highlight right now is the lower distribution. They do not want to open up inside of this range, anywhere between below 4,200. Basically, if you open up below 4,200 tomorrow, expect a lot of chop, or B, this market to start to move back down, and then that will just show that the market has slightly stretched a balance high at the moment, right? There are three rules when it comes to balance. You either A, get to a balance high and roll over. So today that would have been, you know, had we held right here early in the morning at this 95 level and then rolled it back over, that would have been getting near a balance high. B, you get near balance high and slightly stretch it, which is what today's scenario is. Tomorrow, if we open up in the lower distribution and take out the previous day's low down here at 41.7175, then we could say that the daily was slightly stretched to the upside, and the balance was slightly stretched to the upside. Now, the third scenario is you get to a balance high, through a balance high, and never look back. And that is what buyers are wanting to see, right? That would mean tomorrow buyers open up in the upper distribution, basically above 4205, 4200. They open up in the upper distribution. They take out the day's high at 4215, and then they look to move up 15 handles more to 4231.75, get that afternoon rally high, and then grind their way up to 5350, right? That is what buyers want to see, right? That would prove to me that in the bigger picture, we are now one time framing up, and we'll be looking to attack a previous week's high. And on our larger picture, I just want to see what that weekly high is before we look at the daily. That weekly high from last week is 4290.50. 4290.50 is that weekly high. So that would mean, A, we need to get it back above the 200-day moving average. But you would have to grind all the way back up into the 20th range. Essentially, you would have to find acceptance back above 42.50. If buyers could find acceptance back above 42.50, then they'll look to grind their way up to that weekly high. So that is kind of the scenario in the bigger, or on our 30-minute time frame, right? Buyers want to open up above 4,200. Basically, sellers want to open up below 4,200 and then take out the day's low at 41.75, 41.71.75, proving that we just stretched the balance high. Buyers open above 4,200, looking to get improve that we were one time framing up by taking out that balance high. Okay, now let's look at the daily just briefly, so we know where the 200-day moving average is, and we can see what our daily balance, how we're acting within this daily balance. So essentially, this is what, let me get rid of these highlighted areas. We want to get back up into this upper distribution, essentially, where we had all this volume being distributed up here, came down, it's being accumulated here, right? They want to get back to where this cost basis was initially, or near it anyway. So they would want to get back up to 43.50, essentially. So here's the daily. You can see how we kind of just stretched it, right? We kind of just peaked our head above our daily balance high of 42.05. We kind of just peaked our head above it. Now, if we take out today's high, right? We take out today's high, 71.75. We will one time frame up. You'll look to attack that afternoon rally high at 31.25, right? And then you would look to attack that high of day from 42.53.50. So basically the 42.50 level, like I was just discussing. And then you get above that, you have the 200-day moving average hovering around the 42.72 level, 42.72.75 essentially, right? So you have the 50, the 20, all kind of curving down, looking to converge with the 200-day moving average. Now, will we begin to chop in some type of larger price action range going into the end of the year? It's potential. It's all speculation. But right now, step by step, buyers want to take out today's high, slowly start to grind their way back up towards that 200-day moving average. Sellers want to defend this 4,200 level and then rotate back down, right, from here back down to this 41.22.25 level, right? Otherwise, if we don't, then we're just going to continue to get a whole lot of this within this range until something, kind of gives. So those are your two scenarios. That's what or three scenarios, I should say, going forward. So with all that being said, ladies and gentlemen, I hope you all have a wonderful day. Remember, wear your hard hats, be safe tomorrow, use stops, and we'll catch you guys in the next one. See ya.